ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, first day of October 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, not to worry, you can still join the show two different ways. Point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel. It's easy to remember, youtube.com/CFRN. Not only do we broadcast live each day on our YouTube channel, but we archive each and every daily show. Currently, we have over 1,800 daily shows archived for your educational and viewing pleasure. With that, let's open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. Thank you for hearing our prayers, feeding us with your word, and encouraging us as we gather together. We ask you to take our lives and use us to love and serve you and all people in the power of your Spirit and in the name of your Son. We are created by your power, redeemed by your love, and strengthened by your Spirit. We give ourselves into your service. May we love you and love others with all of our hearts. In Jesus' name we pray. Amen. Amen. Well, happy Friday, guys. I hope it's a happy Friday for you. Whoever you are, wherever you are, let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Starting here in the U.S., the Dow's up 233 points. The NASDAQ is up 13. S&P 500 is up 19. And the Russell 2000 is up 20. And for the Russell, that's a gain of almost 1%. In the commodity basket, crude oil up 15 cents, trading 75.19 last. Gold up $5.40, trading 17.62.70 last. And silver up 51 cents, trading 22.56 last. Now, it's silver up 51 cents, that's half a dollar. Remember, when the price of silver moves $1 in either direction, if you're holding an ounce of silver, that means you just made or lost $1. But if you're trading futures, That $1 move is worth $5,000. In the Asian markets, at the close, the Nikkei was down 681 points. That's 2.25%. The Shanghai was up 31. The Hang Seng was down 87. And the European markets at the close, FTSE down 59, the DAX down 104, and the CAC down just a little over 2 points. That gives us a mixed day in Asia. It was a red day in the UK, and so far it is a big green or Radio Friday here in the US of A. So with that, if Michael's ready, we'll switch over to him and get a recap of everything that happened in the live training room this morning. After that, I'll come back and we'll take a look at the Logic 247 alerts, the concierge trade alerts, and of course, at any time during the broadcast, if you have a question, just type it into the chat box and we'll be happy to answer that for you. Now, I don't think Michael's quite ready to take the screens yet, so let me do this. We'll go ahead and look at the Logic 247 recap. We are in week 165 of Logic 247. That's our 24/7 around the clock Emini alert service. We also cover crude, gold, and silver, along with all of the E-mini markets. So here we go. There you are, Michael. All right, guys, since Sunday night at 6 p.m. Eastern, we issued a total of 68 alerts, 8 never triggered, still waiting on 3. So we had 57 actionable alerts, of which 7 or 12% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. Okay, Michael, if you're ready, you can take it away.
Okay, here we go.
All right, I can see your screen.
Excellent. Okay, there.
And I can see your charts.
All right.
It's all yours.
Bring this over. Okay. Yeah, something just closed on me. I'll bring it right up. Hold on. Here's that one. And here it is. Okay, so here we go. Sorry about that delay. Here we go. All right, good afternoon, everyone. Happy Friday. And today is the first day of the last quarter of 2021. Now, if you have not taken a free trial with us and you want to, then go to the homepage here, or go to this page, eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us biggest trading channel so we can tailor one-on-one training just for you. Okay, hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click that link, we don't know that you took the free trial, so you got to make sure you click on that link. All right. The spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, it's a new month, so my spreadsheet's a little bit messed up right now. But being a new month, I had to copy stuff around and do all that stuff. I tried to do it at the end of the last session, but I didn't get it finished. Today is the first day of October 2021. Today we had a rough time with crude. We stopped out to the tick 4 times today. We ended with minus 20, which is better than minus 32, but still minus 20. And we picked up 34 ticks in gold and 50 on the ES. That put us at plus $765 a contract this morning. Today it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 37 trades this morning. So it was another active trading morning. On a month now, it's the first day of the month, so we're only up $765, but that's a good start. On the year, we've gotten our goal on 187 out of 190 days, and that puts us at $111,575 a contract. That's over 190 days, averaging $587 per contract per 2-hour trading day. Now, I didn't finish filling all this stuff in, but it's still pretty much the same. The total hours goes up by 2 minutes. So the total hours is about the same. The total trades goes up by 1. So your average hourly rate so far, you still would have worked about 52 hours. You would have traded 589 times, and 589 times, and your average hourly earning would still be about $2,338. It'd probably be a little better than that on the year. All right, now let's get into what we did do and didn't do and what happened. All right, I'll start out with gold. Gold had some big movements right here during the break. It had some big movements, all during the day, but the market started out a big mess this morning. Let's see, they started out in here on gold. I believe this is where we got our goal for the day on this first trade right here on gold. But as things did start out this morning, my audio didn't work. So this period right in here, 9:30 to like 9:32, nobody could hear me, so I had to get out and get back in. And then while I was getting back in, I took this trade right here and I was able to complete it in front of everyone. And I picked up 10 ticks on that. The next trade right in here, I picked up looks like 1 tick to get me to plus 11 and 3 ticks or something like that. 10 to 11 and to 14. And then we went from 14 to 22. So somewhere in here there was a 1 tick, it looks like. And then here I think is where we went to 22. And then we missed a trade here and we picked up looks like 3 more here to get to 25. We missed a trade there. 5 more there to get to 30. Then we stopped out, put us back down to 22. And then I had a 12 tick gain right there, put me at 34. Then I did even better right there and again right there, and I didn't record either one of those. I'm not exactly sure what the heck happened there, but I didn't record either one of those, and that was it. So this one over here, I'm pretty sure we picked up like 8 or 10 ticks on this, and this one here, I'm not so sure about this. This looks like it was just 1 trade, but I missed this one. During the break, there was a long opportunity right here with another one there, another one there, another one there, and one more right there. It turned around and just recently gave a shorting opportunity right here. Okay, and that was it. So this is sort of a retracement of this big leg up. This big leg up is a retracement of this big leg down. If you were to look at it scrunched up like this, and you were to throw fibs on it like this, right here is 50%, 62%. This right here is about 75% retracement right here. Okay, and it's pulling back off of that 75% retracement right now, and that was gold for the morning. All right, crude oil, my nemesis today. Look at this, all the stop outs that I had on crude today. Stopped out there to the tick, stopped out there to the tick, stopped out there to the tick, stopped out there to the tick. Every stop out I had today on crude. Anyway, we started out on crude. Our first trade on crude was a break even right here. Then we stopped out. Then we got 2 back. We're at -6. Okay, then we got another 2, and we're at -4. We got another 2. We were at -2. Then bam, we stopped out again, back to -10. We picked up 5 ticks, so we're back to -5. And bam, another stop out, -13. And bam again, -21. Then right here we picked up 1 tick to get us to -20. Crude was, it was doing well and hitting the levels and and doing everything that it should do, but it was stopping me out to the tick. It seemed like every time it just seemed like every time it shouldn't have, it did. But it happens. Some days are like that. During the break in here, there really wasn't anything right there, and still nothing through here. We just didn't have anything during the break. Okay, so crude, we ended up with minus 20. You know, we tried coming back from that. We did. We really did. We made a valiant effort. But we made up for it here on the ES. Yeah, I missed a bunch of trades here on the ES. I was trying to do a lot of things this morning. The way things started out today, the ES was just really a mess to begin with. And there was so much bad activity, I'll call it. Fortunately, the slingshot was keeping us out of everything. But our first trade here on the ES, we had a break even, then we had another break even. I think at one point we had like 8 break even trades with 1 doing something or 2 doing something. Another break even. See all this stuff right here, just garbage in there, in here, in here. It would finally give a nice trade right in here, and there was a long opportunity right in here. I don't know why I missed it, but I did. And then finally over here, we picked up 8 ticks on the first one, another break even, another break even, another break even, 4 ticks on that one to get us to plus 12, another break even, another break even, another break even. See all the garbage in here. That's why we had so many break even trades. We're just waiting for a trend, waiting for a trend. Here we picked up 4 more to get us to plus 16. Then we picked up 10 right there to get us to plus, actually we picked up 12 right there to get us to plus 28. And then over here we picked up, when did we get there? 6 to get us to plus 34. Break even there, then 10 more to get us to plus 44. And 6 more to get us to plus 50. And I believe that's where we stopped trading the ES this morning. Okay, now all through here, let's see, there was a trade right here you could have taken for a little bit of profit. More garbage, then nothing, then we hit the zone, then nothing, and coming away from the zone. It was a short right here you could have taken, probably would have been a break even. A short right here you could have taken, would have given some profit on that one. Nothing in here, nothing in here. A short right here you could have taken. That would have given some profit, and that was it. So the ES was just, there were a lot of trades. You know, we had 17 trades, it looks like, on the ES this morning. Most of them break even. It was just that kind of a day today. So let's go back to the spreadsheet. I'll clean this up a little bit. Well, I can clean it up a little bit right now. If I just delete these rows right here. That's better already, isn't it? And we'll go up here. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the first day of October 2021. We lost 20 on crude, made 34 on gold, and 50 on the ES. Put us at plus 765 on the morning session. Today it took 2 minutes and 1 trade to get to the goal for the day. That bar of $100 a contract, and we took a total of 37 trades. So that puts us at $765 on the month, 1 trading day. On the year, we've gotten our goal on 187 out of 190 days. And that puts us at $111,575 a contract. That's over 190 trading days, averaging $587 per contract per 2-hour trading day. Okay. Now, if you've not taken a free trial with us and you want to, go here to eminitrainingschool.com. On this page, all we ask for is your first name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So click on that confirmation link. Okay. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. What is that? Oh, it's dynamic resistance. Okay. Yeah, so we can pass it back out to Studio A. There you go. And there it is. And now we're just missing the audio. There it is.
Mhm.
Okay, today it took 2 minutes and 1 trade to get to $100 a contract.
Good job,
Thank you. Thank you.
as always.
Thank you.
Now, that's what happened in the last 2 hours, just this morning. And again, a real quick look at Logic 247. This week we issued so far 68 total alerts. 8 never triggered, still waiting on 3. We had 57 actionable alerts, of which 7 or 12% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. We also still have our original alerts, the concierge trade alerts. Those don't come out around the clock. Those come out as a static report shortly after the Globex open each evening. So last night, Globex opened at 6 p.m. The alerts came out at 6:10. You'll notice there's 2 numbers for each market: S&P, Dow, Russell, crude, NQ, gold, and silver. If you want to grab a screenshot, you can. And as you'll see when we go to the charts, the way to handle this is you draw a line in the sand at 43.46, draw a line in the sand at 42.90. Once this report is published, if price starts trending up towards 43.46, that's bullish. So our strategy will look for opportunities to buy the market or be long. And if price starts dropping down towards 42.90, that's bearish. And so our strategy will look for opportunities to sell the market. It's also, along with logic, when you use everything that you learn in the live training room each morning, the rules of engagement, the trade setup, the underlying principles, that's when you put all of that stuff to work to yourself. Find opportunities to buy the market as it's climbing and to sell the market as it's dropping. Not much in the way of headlines today, but I will share this. Last month, the month of September, stocks posted their biggest monthly loss since March of 2020. U.S. stocks fell on Thursday, ending the last day of September with the biggest monthly loss since the plunge at the start of the coronavirus pandemic. The S&P finished September down by 4.8%, its first monthly loss since January, and its biggest decline since March of 2020. The S&P 500 fell by 1.2% on Thursday. The Dow Jones Industrial Average and the Nasdaq lost 1.6% and 0.4% respectively. After months of gains in 2021, Wall Street began tumbling in recent weeks as the highly contagious Delta variant drove a coronavirus surge that disrupted the economic recovery. Futures tied to the 3 main U.S. averages plunged further early Friday and were down another 0.5% several hours before the opening bell. So let's go to the chart. And we can see that that tumble has reversed. Last night in the workshop, we talked about the fact that reaching the bottom of this window right here, this is the last night during the workshop, we had not filled this window of opportunity as of yet, but we did talk about the fact that if we made it down to this low, that we should anticipate a nice bounce, and what we got was a very nice bounce. Now you see 2 sets of fibs here. Both are reverse fibs because we're dealing with a down leg, a retracement, another down leg, okay, and the fact that this leg put in a lower low, that is the definition of a downtrend. There's a high and a lower high, there's a low and a lower low. So just based on technical analysis 101, when this bounce is done, we should see another leg to the downside. Now it's possible that next leg to the downside becomes a double bottom and the market starts to recover. But if we do continue dropping, if we take out the low of today's session, in the next spot we expect to find support would be right here, about 42.50, and then below 42.50 down around 42.15. So you might want to write those numbers down. As I said, there's two sets of reverse fibs, one from this high to this low, but then we've got the last leg down. Now all year long you've heard me talk about the last leg up. Well, this is now the last leg down. This was the only leg down, but we caught a bounce to the BBC, which we expect to be good resistance, and it was. It was aligned with the 62% reverse fib. We said if price can overcome, and we talked about this all last week, and we've talked about it this week, if price could overcome that 62% reverse fib, then this area right here, where the bearish cross took place on the chart, we would expect that area to be good resistance. Now, that concept is true on all markets and all time frames with our indicators and with how we read the charts and read price flow. And sure enough, price reached up. We had a big green candle here. Reached right up to the area where the bearish cross took place, and then sellers slammed it down. So that created our second leg to the downside. So last night in the workshop, I drew reverse fibs for the second leg. Now, I'm going to take these off for just a minute so it doesn't look too confusing. Now, because we have a lower low since the workshop last night, we have to adjust this, just as we kept adjusting on the upside. Well, now, because these are reverse fibs, we're having to adjust on the downside because we put in a lower low than where we were last night. And that thing came beautifully down to the bottom of that window of opportunity that we were talking about. So for all you guys that were in the workshop and were able to take advantage of that, that bell's for you. Okay, so from the high, which was put in on September 3rd, to now the low put in on today, October 1st, because we took out that low, definition of a downtrend, lower lows. Okay, and so we're bouncing. Now remember last night I said if we hit the bottom of this, we should get a really good bounce, and this is a really nice bounce. We bounced from 42.59, that was the low put in today, 42.59. We bounced back up to basically 43.21. That's about a 70 point bounce. Okay, but now we have now this is the entire move down, okay, where you've got the 24, the 38, the 50, the 62. So now I'll take these off so that it's not so confusing. And I will draw fibs based on the last leg down. So we have the entire move, leg, retrace, and now we're looking at just the last leg. So on just the last leg, price has already overcome the 24% reverse fib. Right above that is the 38% reverse fib. And just above that is red and falling and the step line. When price approaches either one of these three things from below, be it a fib, be it red and falling, or be it the step line, any one of those individually we would expect to be good resistance. But with the three of them coming together, that's what I call resistance times 3. we've got 3 obstacles in our path for price to continue higher. So what we could see is price continue up into this area, and that could become our next leg to the downside. If we take out this low, then I've already shown you the spots where we would expect price to continue lower too. If we get another leg to the downside, and then that becomes a double bottom, then perhaps the market can turn itself around and get on track for the Christmas rally, the Santa Claus rally as they call it. I know it's only the first day of October, but I bet you they got Christmas decorations up in the stores already in some places. They used to wait until after Halloween and then after Thanksgiving. It was usually the day after Thanksgiving that all the holiday trees and lights and stuff would go up, but sometimes I think they do it at the end of summer. This is going to be a little bit different year though, with the pandemic and all that's going on around the world. People losing jobs, people losing homes. We talked in depth about all of that yesterday. A lot of pressure on the markets. So this may be a little different holiday season than we've seen in past years. So if you're long the market, just keep in mind these numbers. 43.40 overhead as potential resistance. We have a weekly trading zone at 43.36/37. Now, price has to get through that weekly zone and then the 38% fib, and then red and falling, and then the step line to bring it up into this area. So it's got a lot of work cut out for it, and part of the reason I think the markets are rebounding, other than the technicals, we did have a coming together last night. I think we got the budget approved. Congress on Thursday approved a stopgap spending bill to keep the government funded, averting a shutdown just hours before a midnight deadline. President Biden promptly signed the legislation. The votes in the House and Senate came after Republicans blocked companion legislation seeking to raise the country's debt ceiling to prevent a potentially catastrophic default on federal debt. Democrats separated the two measures at the last minute, clearing the way for the stopgap bill's approval. The legislation keeps federal agencies funded until December 3rd, but it leaves the question of the debt ceiling unresolved. Treasury Secretary Janet Yellen has warned lawmakers that the government will run out of ways to stave off a potentially catastrophic default by mid-October. And Senator Joe Manchin, Democrat from West Virginia, said yesterday that he would not vote for a spending plan costing more than $1.5 trillion, which is less than half of what President Biden and other Democrats want to expand the social safety net. Manchin's comments outside the Capitol on Thursday marked the first time he has publicly stated what it would take for Democrats to get his vote. Keep in mind, he is a Democrat, okay, but a moderate Democrat. Democrats had hoped to push through a $3.5 trillion plan using a process known as budget reconciliation, which would allow them to approve it with a simple majority and no Republican votes. But with the Senate evenly split 50-50, Democrats can't afford to lose a single vote. So Manchin and fellow moderate Senator Kyrsten Sinema from here in Arizona, also a Democrat, have the power to sink it. Biden this week met with both of them in a bid to rescue the bill. And Other good news, COVID-19 death rates forecast to fall for the first time since June. The rate of new U.S. COVID-19 deaths is expected to decrease over the next month for the first time since June, according to the CDC. Hospitalizations are expected to fall as well. The figures mark the latest indication that a surge driven by the highly infectious Delta variant was starting to burn itself out. Nearly 2,000 people are dying of COVID-19 daily, according to Johns Hopkins University data. Dr. Scott Gottlieb, a former FDA commissioner, said this week that the Delta-driven surge could fade by Thanksgiving. This is more people getting vaccinated. This is more people wearing their mask. Keep it up, said Kentucky Governor Andy Beshear after announcing falling COVID-19 hospitalizations in his state. And senators, they were very busy on Capitol Hill yesterday. They grilled Facebook executives, accusing them of ignoring internal research indicating that social media can harm teens. Lawmakers demanded that Facebook executives explain the company's efforts to attract young users, despite evidence that Instagram, which is owned by Facebook, makes body image issues worse for many teen girls and is linked by teens themselves to anxiety and depression. Senator Ed Markey, a Democrat from Massachusetts, said Instagram is that first childhood cigarette meant to get teens hooked early, exploiting the peer pressure of popularity and ultimately endangering their health. Facebook's global head of safety said the company's platforms actually add value and enrich teens' lives. Wow. Talk about two opposite ends of the spectrum. If you have an Android phone, be careful. There's a scam app out there. There's quite a few of them. And they're attacking Android users to get a $42 monthly charge on their wireless bill. More than 200 apps run by the attackers were used to scam money from the people who downloaded them. And I don't think I can get past the paywall on this one. Oh, it's a new month. Maybe I can. No. Well, let's see. Well, it's possible. Hang on. We did it. We got through. All right, this is the story for those of you with Android phones. A massive scamming campaign recently plagued the Google Play Store, affecting millions of Android users. The scam took place by more than 200 apps run by attackers to scam money from its downloaders. Zempirium, a member of the Google App Defense Alliance, which scans applications before publishing in the Google Play Store, estimates that 10 million Android users globally were affected by this scam. 10 million. Multiply that times $42 per person. Now, the application posed as seemingly normal downloads, hiding under facades like Photo Effect Pro, Daily Horoscope and Life Palmistry, and Free Coupons 2021. If any of those names sound familiar to you, you need to get those off of your phone and check your bill. The apps would notify downloaders that they won a prize, and we would redirect them to enter their phone number on a specific web page. However, by entering their information, users were actually submitting their phone numbers to an SMS service that would start charging their phone bill about $42 a month. Forensic evidence of this active Android Trojan attack which was named Grift Horse, suggests that the threat group has been running this campaign since November of 2020. These malicious applications were initially distributed through both Google Play and third-party application stores. Scams like Grift Horse take advantage of small screens, local trust, and misinformation to trick users into falling for their scams and downloading their apps. They also prey on frustration or curiosity when they try to accept their fake prize. According to Zimperium, the level of sophistication, use of novel techniques, and determination of the threat actors has allowed them to remain undetected. Google says that all of the apps identified by Zimperium have been removed and the developers of the apps have been banned, but the scams will have lasting effects. Android users who have not stopped the charges have faced unwanted additions to their wireless bill of over $230. You gotta be so careful out there. And we thought it was just a phone, but it's so much more. Now, anti-vaxxers somehow are finding ways to still have active channel despite YouTube's ban. And Blue Origin employees are accusing Jeff Bezos of sacrificing safety to win the billionaire space race. In an open letter published this week, 21 current and former Blue Origin employees accuse the CEO of abandoning safety and creating a toxic, sexist work culture along the way. And in our final headline, CNBC obtained and published several notes from the Theranos founder, Elizabeth Holmes. Her trial is ongoing. And in one of these notes, she wrote about becoming Steve Jobs. She was her hero. She started to act like him. She started to dress like him. But at the end, we found out that she was no Steve Jobs. She claimed in one of the notes about having nothing to hide when the company's testing issues were exposed. But now everyone knows the machines simply did not work as promised, and that's what the trial is all about. She could face up to 20 years, and she is currently with child. So, okay, the concierge trade alerts. We're going to go through those here real quick. If you want to grab a screenshot, S&P, Dow, Russell, crude oil, NQ, gold, and silver. Okay, let's go to the, so we know what we're looking for on the S&P from the daily perspective. We know where this batch of resistance is. Got a weekly zone, we got a fib, 38 fib, red and falling, and a step line. That's four things that should give us resistance in this area and potentially create the next leg to the downside. Question is are buyers convinced enough to push it that far? Well, we'll see, and we might see by the end of the day. Up close, this is what it looks like. We're already at the lowest weekly trading zone for this week. Now, earlier in the week, we talked, now this is an old weekly zone, but look at price. It came right down to that old weekly zone, found support. We did talk about this last night in the workshop. Up here, 43.23/24, that is this week's lowest weekly trading zone. And when we broke below it yesterday, we did say that we would expect by the end of business Friday, based on historical data going back to December 14th of 2009 when we first published the weekly trading zones, that based on all that historical data, by the close of business Friday, price would be at or above this week's lowest weekly trading zone, and it's trying to do that as we speak. The weekly trading zones are a very important tool in your trading toolbox. So if you are a CFRN passport holder, then by all means make sure you get those on your charts at the beginning of each week. But Sunday night, Monday, Tuesday, be sure and hang on to the old zones. If you don't want to crowd your screen, you can always just keep them on a notepad beside your keyboard. Now the vertical line separates today, Friday, from yesterday, Thursday. Okay, so here's the open last night. We were well below the BBC. We expected resistance here. Based on that, we drew this in last night. The short CTA was 42.90. So we triggered 42.90, and we only triggered it once here on the 30-minute chart, and price dropped to a low of 42.68.75. We call it 42.70. It's a 20-point drop at $50 a point. It's $1,000 per contract traded off the CTA. Now we did trigger again over here. Price is below the BBC. You've got blue and climbing, but it's way up here. So whether you would take this trigger, that would really come down to a personal preference. What we want is we want price below the BBC on a short, and we want red and falling as we trigger and throughout the life of the trade. This is sort of an aberration, and it came off of the, here's the 9:30 opening candle, then here's the 10 a.m. candle. Not sure what news we had at 10 a.m., but apparently it was enough to knock price below the BBC. And so if you did trade this one, price dropped from 42.90 to 42.78. So that's about 12 points, $50 a point, $600 per contract traded. Again, price is now at the lowest weekly trading zone for the S&P. And based on historical data, we expect price to close the week out at or above the weekly trading zone. Have there been weeks over the last decade plus since 2009 where that didn't happen? Yes, there have. I don't have an exact number, but I would say it's happened, I don't know, for the S&P maybe 10 times, 20 times. We're talking about 52 weeks a year over 10 years. So, yeah, maybe 20 times, maybe 30. So, with that said, we'll go to the Dow. Here's the long CTA, which hasn't triggered yet. 34,105. Here's the short trigger. Here's where we triggered at 33,660, and this low $33,481. So 660 minus 481 times 5, $895 per contract traded. Now here, this is similar to what we saw in the S&P. We had a bullish cross, price ran up to the weekly zone, and that is the lowest weekly trading zone for the week. So we traded below it, but we have managed to get back above it at this point. It's highly doubtful that you would be of a mind to trade this short alert, because you're expecting the pullback to the BBC to hold, because the pullback holds more often than it doesn't. So price pulled back, and it just walked over the line, but you're still expecting this to hold. So while this is a perfect setup, or a textbook setup, this would not be. If buyers keep the pedal to the metal, we could see the long CTA trigger. If so, the target overhead for that is 34,320. And then came the Russell. And that number should actually be 2225. So we've been rejected so far on the short side. That number should be 2195. Okay. So we're below the BBC. This is the open last night. We've got red and falling, and we come right down through 21.95. And price continues lower, but just this initial drop, 21.95, took us down to 21. Well, for the simplicity of math, we'll call it 21.80, be conservative. That's a 15-point drop at $50 a point. That's a $750 per contract move. Bullish cross, rally up to the weekly trading zone, consolidation, pull back to the BBC, the pullback held, and now here we sit right at the CTA. Now if we trigger the target on every long alert, the final trade to target is the weekly zone above. So in this case 22.32. So from 25 to 32, if it makes it to the target, that'd be a 7-point move. Here we came just shy of the target. The swing low was 2171.3, and the zone is 2169/2170, and that is the lowest weekly trading zone this week for the Russell. On the NQ, no trigger on the long side yet. On the short side, here's the open last night. Price rallies up, almost touches the BBC, which we expect to be good resistance. And then we take our drop, and from 665, waiting for that to fade out of the way. There we go. The swing low here. Now we're well below the lowest weekly zone. It's way up here at 14,880. Doesn't look like the NQ. It would be quite impressive if the NQ could recover and close above the lowest weekly trading zone this week. Doesn't look like that's in the cards. But the swing low right here. Come on. 14,575. So 665 minus 575. 665 minus 575 times 20. NQ pays $20 a point. That right there, if you're trading one contract, it's an $1,800 per contract move. Unfortunately, over here, as price comes down through the trigger, I mean, this is an even bigger move, but I would hope you'd be very hesitant about trading this trigger because the BBC is right here, and we expect that pullback to hold. Why? Because it holds more often than it doesn't. Doesn't always hold, but it does hold more often than it doesn't. As you can see here, and here, and here, and here, and here, right? And here. But it didn't here. So just because this happened once, or happens a few times, or happens occasionally, even as we're about to trigger again right here, we would be going short right into what we expect to be support. So that's not something we want to do. We want our chart to look like this. Red and falling, accompanying price on the way down, not trading into what is potentially good support. Okay? Yes, this time it still did it, but you can't count on that. What you can count on is the pullback holding more often than it doesn't. So that covers the S&P, the Dow, the Russell, the NQ. Here's crude oil. Looks like we had two-sided action. 74.40, we dropped down to 74.23, $170 per contract traded. Then price got back above the trigger and did it again. Got back above the trigger. This time it only dropped to that's about an $80 per contract drop. And it gets back above the trigger, drops again. This time $140 per contract traded. And then again, and then again. Now 1, 2, 3, 4, 5, 6 valid triggers off one alert. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Over here, on the long side, 75.40 took us up to a swing high at 75.57. From 40 to 57, that's $170 per contract traded. And then here, we triggered again, and from 75.40, we ran up to 75.62. That's $220 per contract traded. Crude having one of its best months in quite a long time, and based on the news and what's happening with shortage of drivers, there's no shortage of natural gas, no shortage of crude oil. What there's a shortage of are drivers to get it from the refineries to the gas stations. So there's talk out there of $80 crude, $90 crude. A few years back, crude hit $140. Then it fell off an absolute cliff and dropped. I think in the last 2 years we saw crude trade as low as $20-30. So this is a true supply and demand issue. The world needs crude to function. The world needs natural gas to function. Of course, man is coming up with other ways of powering things, from solar to wind energy to electric. But in our current state, we need crude oil, we need natural gas, and there's true supply and demand issues. If the S&P 500 disappeared tomorrow, if the S&P E-mini futures contract disappeared tomorrow, well, there'd be a lot of unhappy campers. But everybody would still wake up, go to work, go to school, pet the dog, life would go on. Because the S&P 500 is something created by man. When we start talking crude and nat gas and precious metals, gold and silver, God created those in the beginning. He said, let there be, and there was. Okay, 2 markets left. And this doesn't look right here. Let me check. Oh, the short side here, let me show you. The short side was 1746. I put the wrong thing there. The long side for crude was 1762. The short side was 1746. 1746 obviously never got touched, but the long side, 1762. And it ran to the target, which is the weekly zone above, 1765/66. So from 62 to 65, that's $300 per contract traded. Back below the trigger, triggered again. Went from 62 to 63.40. That's $140 per contract traded. And we dipped back below again, but we still have blue and climbing. And so we could see another trigger during today's session. If we do trigger at the trigger 1762, be sure to look left, because you've got potential resistance right across these 3 highs right here. We'll call that 1763 just to be cautious. If we get above 63, then there's a trade window of opportunity from 64 to 65. And then the final one. Michael R. just put in the chat box that April 20th of last year, crude was at $40.32 a barrel. Thank you, Michael. Okay, silver, no trigger on the short side. On the long side, this first little move here got rejected. Went up about 1.5 pennies, got rejected, pulled back to the VBC and the weekly trading zone. When price pulls back to the VBC, we expect it to hold. When price drops to a weekly trading zone, we expect support until proven otherwise, and so that's what we got. Then we triggered again, and price ran almost to the target. It made it to 22.42. It later went on to hit the target, but just on this initial candle from 28 up to 42, that would be 14 pennies. 100 pennies is 5 grand. This is a 14 penny move. And there you have it. S&P consolidating now for 2 hours at the lowest weekly trading zone. And from the daily perspective, looking at just the last leg down, not the entire move, but the last leg down, the area you want to watch, we're at a weekly zone right now. That's why price is, it's trying to grind its way through that weekly zone. If it can get above the weekly zone, which is 44, which is 43, hang on, 43.23, 43.23. See, we're right at it, 43.23. /24. If price can overcome that weekly zone, then it can make a run. And that creates a window of opportunity from basically 43. Let's call it 43.30 to 43.40. That'd be a nice 10-point run. $43.30 to $43.40. Then, of course, we've got the long CTA trigger up at 43.46. Yes, I'm sorry. Actually, yeah, there we go, 43.46. So that would be above that window of opportunity. And if we look left, 43.30, you could have potential resistance at 43.35. And if we get through 43.35, then price could glide right on up to 43.40. And then there's potential resistance at 43.44. That takes you to the trigger, 43.46. But I like the looks of this window of opportunity right here. But you got to break it into two segments because you've got potential resistance right in the middle of it. So 43.30 to 43.35. And if it's a strong momentum push, of course, you could just stay with it as it works its way up to 43.40. Okay, for the full 10-point move. If you just caught the first half, 5 points, nothing wrong with that. Okay. Well, that takes us now to our good word for the day. Yesterday, we talked about your Euroclydon. Today, James 4:10. Humble yourselves in the sight of the Lord, and he will lift you up. Topic, if there was a topic, thinking of yourself less. Sometimes it's difficult, isn't it? Here's a true saying. Humility is not thinking less of yourself. It is thinking of yourself less. Say that again. You can feel free to make that a bumper sticker or a t-shirt if you want. Humility is not thinking less of yourself. It is thinking of yourself less. That doesn't mean being a doormat for people to walk on or being spineless with no convictions and opinions. True humility is acknowledging God as the source of all you have and all you need, and always remembering to give him credit for both. The Bible says in Genesis 2:7, God formed man of the dust of the ground and breathed into his nostrils the breath of life. God's intention for mankind was to live in paradise and enjoy his presence every day. But we disobeyed him and decided to live by our own rules instead of his. And the result, Genesis 3:19, God said, "For dust you are, and to dust you shall return. Let's face it, on our best day, we're just dignified dirt. Although we are divinely fashioned dust, the reality is that each of us is worth an estimated $7. $7. That's adjusted for inflation. So when you die and your components return to dirt, that's your physical value. Pretty humbling, right? And when you drive a luxury car, remember that $7 is driving that $50,000 car. $7 is living in the suburbs. $7 is wearing designer clothes. $7 has more money in the bank than you're actually worth. Paul defines humility in these words. Romans 12:3. Don't think you are better than you really are. Be honest in your evaluation of yourselves. Do you want to know what makes you truly, incomparably valuable? It comes from Colossians 1:27. Christ in you, the hope of glory. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.